daily chart, we have this triangle that's just lasting forever. And I feel like every day I just say it's a triangle, and we're probably going to test up 7,700 and the all-time high. And if we sell off, there's probably going to be buyers below scaling and lower. And that's pretty much all I've got. We have 2 legs down. We have a bear breakout here. Low 1, buyers below. We're trying to reverse up. At some point, I think we're going to find buyers and test up. I think the odds favor that. And when I look at this trading range that we have right here, the range is contracting. And ultimately, because of the higher time frame context, I think the odds are we are going to test up. And it's probably more likely a bull flag than the start of a strong reversal down. Gapped up on the open with bar 1. We had a spike in channel day. First bar of the day, bar 1. We had a bear bar, relatively large bar, big risk. Probably a strong enough bar that we'll probably get some kind of second leg down. So there's probably sellers around the midpoint. Reasonable to think we may have tested the moving average. Then we had an inside bar closing on its low. That's a strong enough bear inside bar that will probably go at least a little bit lower. And then we had three consecutive bear bars. But we have an inside bar on 2 and 3, little overlap compared to 1 and 2. And we had a gap up on the open. Now we're breaking out of the inside bar. So this is possible. It's possible second leg trap on a smaller time frame. We had to sell off on 1 inside bar, second leg down 3. That increased the risk. There might be more traders buying 3. Then 4, we have a strong enough bull reversal bar. That's a strong enough bar that you have trapped bears who sold the close of 3. And those bears they're probably interested in buying back their shorts. With the 3 consecutive bear bars, there might initially be sellers above 4, but there's probably buyers in the bottom third of 4. And you can see what happened. Instead of the market selling off below 4, it found buyers in the bottom third and we rallied. 5, bull bar, not a great sell, so it's a bad low 1. Consecutive bull bars, reversal, bar 4, follow through bar 5. It's not a great follow through bar or entry bar for the bulls, but it's strong enough they'll probably go a little bit higher. And we had the buying pressure with the tail below bar 1 and the tail above bar 2. And because of the gap up, it's probably more likely to be a trading range. Now we have 3 consecutive bull bars with 4, 5, and 6. With bar 6 closing on its high, that's a strong enough bull reversal, and it's a 15-minute reversal. We had a bear bar closing on its low on the first bar of the 15-minute chart right here. And now we have a bull reversal bar here. That's a strong enough bull reversal bar. It's reasonable to buy it, stop below. Other traders may wait for follow through and then buy. You made a doji 7, but not a great sell, probably buyers below. And then 8 bear bar. I still think buyers below, at least a little bit higher. 9 bull bar, outside up, good for the bulls, probably going to go at least a little bit higher. 10, another outside bar, so we have consecutive outside bars. Strong enough that we'll probably find buyers want to pull back and at least get a second leg. Now we have a doji. What about selling the doji? Betting that it's a lower high with bar 1. It's probably low probability. The channel from the 4 low to the bar 10 or 11 high is rather tight, and that increases the risk that there's buyers not far below. 12, strong enough surprise. We'll probably go a little bit. We'll probably go higher. It's parabolic wedge, and it's a bull breakout of a bull flag. So you have trapped bears who sold the 11 high or the 10 high scaling and higher, and therefore you know that there's probably bulls buying. You know there's bears probably buying back shorts around the 11 high, and there's bulls probably buying as well. Breakout on a higher time frame, such as a 15-minute chart, and therefore whatever reversal down we get is probably going to be minor. At a minimum, the bears probably need a series of strong looking bear bars. Doji 13, probably buyers below. And then 14, we broke out to the downside. Not a great sell. Consecutive bear bars, it's good for the bears. Increase the risk we get some kind of second leg down. But we may easily test back to the 11 high or the 13 high before we get a second leg. Not a great sell to close on 14. Then we got a bull reversal bar 15. Good for the bulls, but starting to get a lot of overlap. and that lowers the probability that we're going to break out above 13 high. And you can see what happened. We broke above the 13 high. We broke above the 13 high on 16, but what happened? We found sellers above 13 high. And then we pulled back on 17. That's good for the bulls. Probably buyers below, but I don't think we're going to go a lot lower. We formed a bull bar 18. 18, a little bit of it's contraction after the breakout on 12 or the rally up to bar 12. We may get a small second leg down and have to test the 15 low and the moving average, but I suspect the downside's probably limited. 19, outside down, good for the bears, but probably more traders buying than selling. And 20, strong enough bull bar. That's a strong enough bull reversal bar that I suspect will probably get at least some kind of second leg. And then 21, now we have consecutive bull bars, good for the bulls, probably buyers below in the second leg up. 22, follow through. Follow through is a little bit small, and this looks like we're in a channel. Because we're in a channel, even though it's tight, I still think it's probably better to wait to buy a pullback. And therefore, you'll have some traders, instead of buying up here, they'll be more interested in buying a pullback. The bulls are hoping that we have a wedge, 1, 2, and then 3. But what's the problem with it? Well, the third leg up is 4 consecutive bull bars in a micro channel, and that lowers the probability for the bulls. Plus, it's just that the wedge is tight. We have a spike, so that's leg 1. We have a pullback, leg 2, and bears aren't making money below bars. And then we have a potential leg 3, but it's also a breakout of this tight trading range. So it's possible that this rally here is trapping traders into a bad buy or in a bad sell. 24, now we have a bull bar closing on its high. That's good for the bulls. And we have 5 consecutive bull bars. I suspect buyers below scaling in lower. And then 25, we have a bear bar, and you can call it a high 1, but you can see traders buying below 24. As far as selling above 25, I would not. I still think buyers below 24, buyers below 25, and we'll probably get some kind of second leg. You can see it's retesting the breakout point, 16. Some bears sell the 16 high. They get trapped by the bull bars all through here. And what do? They try and get out near the original entry, and they were unable to. And then the market tried again on 26 to test that breakout point on 16, and they still couldn't get there. And then 27, we formed a small inside bar, but I suspect probably buyers below it. And we tried to form a bull bar, 28, it's a high 1 buy. That increases the risk that we'll try and go a little bit higher, but typically high ones are always micro double tops, and low ones are always some variation of a micro double bottom. And that's because a high 1 is a retest of the extreme. And if you think about it that way, what are traders going to do? We have some traders who bought the close at 24, disappointed, 25, 26, disappointed, 27. What are they going to do on the rally, 28? They may try and get out back at the test of the 24 close. And you can see that's in part where we got the doji on 29. 29, bear bar, but small, fairly small bar, lowers the probability for the bears. And then 30, we went down. We have consecutive bear bars. Is that good for the bears? You can argue it's good for the bears, but it's subtle, and there's something really important. There's a few things to understand. 1, 30 is 29 and 30 are relatively small compared to the bars to the left. So that is more contraction. We have a breakout here, range expansion. Markets break out, they contract, and they break out again. They break out by the bulls getting trend resumption, or they break out by the bears getting trend reversal. And let's see here. Yeah, anyways, the other thing with 30 is the tail above 30. So the market sold off from the high of 29 to the low of 29, then it rallied on 30, and it sold off again. So sell off, pull back, second leg. That's a big problem. That's a problem for the bears. For me, you really want to see signs of strength, and it's a sign of hesitation. Plus 30 is at the bottom of the trading range, which lowers the probability. And then we got that strong surprise 31. That's a strong enough bar. We're probably going to go higher. By the way, whenever I'm looking at a chart, I don't like to have bars at the top. I don't like to have bars at the bottom, because it gives the illusion that there's not a lot of room left. So I always like to try and keep the bars like this, a reminder that it can continuously go higher. 31 bull bar, good for the bulls. What about exhaustion? It could be exhaustion, but to me, 31 is a little bit of a surprise. It's breaking out of that 5 bar or 6 bar tight trading range. And we have arguably gaps here. We clearly have an open gap here. And this is a fairly tight channel. And we have the magnet of yesterday's high above. Makes me think a second leg up is likely. Then we got the bear bar on 32, but probably buyers below it. The bull bar 33. That's good for the bulls. I still think we'll probably try and get a second leg. And then we ended up getting a second leg up 34, 35, 36. What about selling because you're near the yesterday's high? You can, but the reality is the first reversal down is probably going to be minor at best. And there's not a lot of room to the moving average. And every bar that is above the moving average is dragging the moving average up closer to the current price. And because of that, in general, when you're selling, when the channel looks this tight without a clear stop order, it's usually better not to sell and better to wait to enter on the pullback. Doji 37, probably buyers below and at least a small second leg. Then we have another doji. We're hesitating right at the magnet, yesterday's high. And then we finally got the upside breakout on 41. 41, strong enough bull bar that while we may get a second leg up, we've already had a lot of consecutive buy climaxes. And that's why I mentioned that 44, 41, the bull bar, I thought was a reasonable sell to close bar. It's a reasonable sell to close, betting on a test of the bottom third of the bar and betting on the moving average. 42, strong enough bear bar. We'll probably get at least a small second leg. But I think it's not an easy bar to sell below. The risk is already, I don't think the reward potential is all that great. And then 42, follow through, but small follow through bar, probably sellers above and a small second leg down. And we finally reached the moving average with 46. 46, testing support, strong looking bear bar, but bad context. Big bear bar, so that's good for the bears, but at the moving average, which has been strong support all day, bad for the bears. You have some bulls who tried to buy the moving average, 46, and some of them would pull their order when 46 closed on its low. Other traders, if they were long and they got filled on 46, they may look to exit on a bounce and then re-enter, depending on what the follow through looks like. 47, bull bar, not a great buy. But from a context standpoint, it's not a great buy signal bar. From a context standpoint, it makes a lot of sense. Then we have a doji 48, probably buyers below. And then we tried to test up to 41 close. We have a bull bar 50, pause, second leg up 51, and then we had a reversal down 52. I thought that's a little bit of an implied parabolic wedge, and it's close enough testing the 44 high and yesterday's high and strong enough bear bar. You always have to respect the possibility that it might be a double top, lower high, major trend reversal. Typically, when you have this is a minor reversal pattern. We haven't had any bars below the moving average all day, and it's a second entry, and it's a double top with bar 42. It's probably not enough bars down, and it's not enough bars to the upside. And it's pretty common whenever that happens. Even if you fall below 48 and break below the neckline, or 49 in this case, and break below the neckline, the odds are it's probably going to form a larger major trend reversal, which means even if this is a lower high and you get a second leg down somewhere down here, it's probably going to lead to a two-legged sell-off where the market finds buyers and then reverses back up and goes sideways. Not a great buy, 54, outside down 55. Bears probably need one more bar, and instead we got a bull bar, but not a great buy signal bar. So there could be sellers above and we go sideways. And then, I thought this was a problem for the bulls and the bears. The bulls, they're not getting decent buy signal bars, but because of the overall context, it's probably more bullish than bearish. And for the bears, they're not getting a series of strong bear bars. They're not getting this. We had a small pullback bull trend, sideways trading. We had a strong surge below the moving average, here. And they're just not getting that on this chart. And because of that, I thought it was more likely to lead to buyers down here in some kind of reversal up. And then the bulls, they tried to break out to the upside, but it was a 50% pullback from the high of 53 to the low of 61 we ended up finding sellers. Bull bar 69, probably buyers below. And then we ended up starting to go sideways for a lot of bars and forming that triangle. At this point, breakout mode, it's basically 50-50. And the bears ended up getting the downside breakout, but look what happened. They immediately got bad follow through. For stop orders, because we were always in long pretty much the whole day, with the exception of the open, you can pretty much buy above anything, which means you can basically buy below anything as well. Certainly all through here. Probably okay for the bears to sell below 2, knowing it's low probability because you're at the moving average. And bulls, they can buy above 4. They buy above 4 and stop below 4. Where do they get out? They don't have to get out anywhere in here. Technically they get out, maybe 38. I don't think they have to. 42, they can get out. And if they buy and they get out for any reason, they just buy again above a bull bar. Not a good sell here, not a good sell here, not a good sell 19. Really not a good sell 38. And bears, if they sell 42, they got to get out at the moving average. Bulls, if they buy, they probably get out below 53. Bears, they can sell 53, try to get out above basically any bar. And here, I think this is just a recipe for disaster if you're trying to trade stop orders aggressively. Limit orders, I thought buyers below 1, but better to I'd look to buy closer to the moving average. I thought buyers below 8 and even buyers below 9, probably buyers below 11 or buyers below 13, but probably more buyers at the 12 low or the 11 high, somewhere in there. Sellers above with the reversal and follow through in the selling pressure here. It's reasonable to think there's sellers at a new high, but selling above a bar like 15, I would not. It's bull bar closing on its high in a fairly tight channel. Better look to buy. Probably buyers below 18. It's sell off, pause, and then a second leg down. And I thought buyers below 24, but at that point, so many bars up, we may just go sideways. I thought buyers below 32. It was a pullback after the bull breakout of the tight trading range, if that made sense. Sellers above 43, but even I ended up getting out in that area. I mentioned that. And I don't like being short when the channel is this tight. I sold the close of 41, and I got out somewhere in here for a few ticks. And then I thought buyers down here at the moving average. I thought buyers below any of these bars, betting on a bounce. And this is just really difficult. I wouldn't trade it with limit orders. Buy the close, sell the close. I would sell the close bar 3. I would not. 2 legs down, near support, moving average. Better to wait. And then at some point here, it's buy the close. And where did it become buy the close? I don't know. I think technically it became buy the close somewhere in here. Maybe 22, 23, 24, or buy the pullback. But even bar 12, it's not buy the close. It's better to buy the pullback. These bars aren't buy the close. It's really better to buy pullbacks. So realistically, there's not any good buy the close, sell the close. It's a channel. And it kind of makes sense. Channel phase is not good. Buy the close, sell the close. When you have buy the close, sell the close, you really want to see a strong breakout. Something like this, big bull bar, follow through, that's really buy the close. But even this has its own problems. Big gap down, testing the moving average. It could just be a 50% pullback. Where do we go tomorrow? I think that the market is trying to get the all-time high test. We have a bull bar closing on its high today. Bulls are hoping that tomorrow gaps up and we basically rally on the Globex session. So one of two things. Well, there's two things the bulls want. The bulls are hopeful that tomorrow we open around today's close and we get a strong bull breakout. Or the bulls are hopeful that we just gap up, rally during the overnight session and gap up here. This is obviously a Globex chart. Bears, they want to prevent that. Because we're in the middle of a tight trading range, the odds are there's going to be something disappointing, and therefore we're probably not going to get some sort of strong upside breakout. But we'll see. All right. Thanks everyone for tuning in, and I will talk to everybody later on. Have a good one.